I remember very vividly the thought that I had that I should start solving problems that I don't yet have, right? It's like I want to invest in relationships with people that I just have absolutely nothing to offer now and probably for a very long time.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Nikita, thank you so much for joining me today. Super excited to chat with you. All right, Nikita, you're the managing partner and head of Fasanara Digital. Fasanara Digital is the digital asset arm of Fasanara Capital, which is a London-based institutional asset manager specializing in alternative credit and fintech investing. Fasanara Digital was actually your first job out of university, and from my understanding, you basically started as a project with your friends at university. You were building kind of infrastructure for trading market neutral quant strategies within crypto, and you actually did an internship at Fasanara, and essentially you pitched Francesco, who's the founder of Fasanara, hey, this is what me and my friends have built at university, and we want to kind of scale this up. Is it possible that we partner? Is that kind of a rough framework of what happened?
Yeah. First of all, thank you, Andrew, for having me. Really fun to do it. Yeah, I think that's pretty accurate. So I at university thought that starting a fund later on, once I'm ready, would be the perfect way to kind of execute on first chapter of my life. And so I really doubled down on the knowledge acquisition and building the network throughout my university days. And towards the second half, I did internship at Fasanara during the summer 2017. That's when I learned about crypto and Bitcoin. And so on the back of it, created a research team to do quant trading of crypto. And there were like 20 guys with me working on it. We pursued a variety of different strategies and I felt compelled to do something entrepreneurial after graduation and thought that there is a pretty unique a moment to really push ahead the timelines that I was contemplating from first year of university and give it a go. In the worst case, we'll have some cool stories to tell in a couple years' time. That we will be able to catch up with some of the peers. If things work out, well, we can skip the plans altogether and just focus on the second chapter of the roadmap. That I kind of set myself. So yeah, basically, I did internship at Fasanara and built a really good relationship with the founder. She was mentoring me from the first year of university, and when the team and I approached him and told him about the unique opportunity that crypto market presents, he liked it, and so we started this undercover project for 2 years. It was largely unspoken truth that Fasanara was involved because back then crypto wasn't remotely on the minds of institutional investors. It was a bit of a swear word, but it kind of with time, as our track record and size and market maturity started to progress, then we started to become much more vocal and eventually, pretty active contributor on the push of the adoption of the asset class, be it through some thought pieces, conferences we organized, some events, and so on.
That's amazing. Okay, so what was it like talking to Francesco at that early stage? Because you're in university. Sure, your background, you have some relevant university experience, but you had no actual experience. And then you're pitching crypto, which, as you mentioned, like back then, like 17, 18 was like absolutely like a no-go zone. So he must have had so much belief in you somehow. Tell me about that. Like, were you really good friends with him, and then it was easier, or like he just saw a lot of promise in you, or how did that relationship enable you to launch Fasanara Digital or Fasanara Digital?
Sometimes ignorance really plays a favorable role in what you're pursuing. So I think like I was completely unaware and blind to the hardship and the complexity of the undertaking. And so I just kind of by default assumed that, I had nothing to lose. Well, I had nothing in the first place. So, I couldn't really, get my situation much worse. And we're like so convinced and so sure that this is like all straightforward, that I think like whatever we were saying like carried a lot of weight. And like I'm not necessarily speaking about those delusional people that sell you the dream, but I think like with and like we're 21, 22 years old, so you kind of do the fair adjustment for that. And I think we had a lot of a basic knowledge about the industry of how hedge funds work, what it takes, and so on and so on. Obviously, like as years unfolded, most of it was overly simplistic, and so we matured, and a lot of things changed. But I think coming from this point where we're locked in the trades, when we're certain that this is happening, and it was just a question like who would do it with. Each in retrospect, I think like all the options we had were like rather suboptimal and subpar, but who knows? Like I think we might have pivoted to different things and so on. But yeah, I think like I was able to forge a really good relationship with Francesco, and I on the back of the internship I organized the first edition of the Quant conference, which was my kind of second project out of university other than the trading team. And there, like, I really tried to bring some like-minded individuals and push my network, because I thought that networking is really counterproductive. You kind of go and network one-on-one with people. Would be much cooler if you could do some platform where people could come to you, and then you kind of forge relationships where again it's on your terms rather than you kind of reaching to people and having nothing to give and like all to take. But so I think he was like quite impressed how like in a pretty short period of time within summer I was able to create a team and assemble like a pretty impressive roster of individuals from like 10 different universities across the UK, and cherry picking them and so organizing this conference together with Bank of America, and getting like 25, 30 speakers from like all top hedge funds, and doing it while I was just a student. So I think like all of these were kind of nice data points that he kind of saw, and then extrapolating from there. I think just getting early in some asset class, I think carries some extra opportunity, especially if you're like focused on it. And I think he felt probably that this was worthwhile opportunity and rolled the dice. But I think we should definitely chat with him to pick up his view on what is exactly did he see, because that was quite a big bet on his side.
Definitely, yeah. If you had to start from scratch today in terms of brand building or in terms of that idea of, hey, I want to build up my network here with relevant folks, is it possible to kind of copy what you're doing today and launch a conference for quants and traders and kind of hedge fund folks right now? Or is it kind of been inundated now with there's just too many conferences, too many events? And would you take a different strategy in terms of building out your network and brand today if you had to start from scratch on that aspect?
With conferences, and I kept on doing conferences. We actually have our annual one in late November. So clearly, I'm voting with actions that I think there is still a gap in the market for quant finance. I think it's also very true, because I think oftentimes some of these events, uh, and just like everything in life, I think it's all about incentives. Like, what is it that you try to achieve? And oftentimes, these big organizations, they host, tons of different events. They lack, quality, and then they optimize for money, which, is not necessarily a bad thing to do. But from day one, even when, I had, again, no capital, I thought that for me, the upside is in just forging those relationships. And so I could easily, sacrifice, the some like sponsorships in favor of just better and stronger like attendees at least, and it's a better and stronger agenda. And I think like if you're in position to make this kind of judgment, foster that like the best venues possible, feed people well. So really like make it worthwhile for people. Keep your own costs to zero or very little, and just do as much if not all by yourself. I think now with AI you could really be very very efficient that way. And so I think like overall it's like simple idea that's it's hard to do the same thing as everyone and expect excellent or it's like exceptional outcome. So I think by default I'm always steering away from doing what others do. Like whenever like I see again a large cohort of people just go in certain way, I'm like by default that can be the answer. So you kind of need to internalize what are the edge that you have and press it, and what weakness that you have and kind of augment it, and ultimately be extremely later focused one on what ultimate result that you seek, and what are the building blocks of of getting there, milestones of getting there, and what is the kind of the good enough outcome. Because sometimes people just get the good enough and then they waste tons of time getting to better than good enough, but the value accrual beyond that point is just so small, like diminishing marginal returns. So I feel like bouncing from one path to another, from one idea to another is efficient, but once you kind of get a bit more experienced. So I think conferences are a great tool. It's better to be organizer than coming to them, but we speak at a bunch of conferences as well. I think there is nice opportunity, and I would recommend people to give it a go, but learn the craft before doing.
Very cool. Very cool. Okay. So the early days, I believe in the first 2 years of running the fund, I think you raised a total of 2 million. Is that right?
Yeah, something like that. So it's been a long journey. Like it took us a year to raise, 500,000, and then probably within a year on top, yeah, we raised two or something. So it was very very gradual. So yeah, the fund was making no money for a while.
I believe you guys are above 200 million now.
We're like 500 now.
500. Okay. Excuse me. My information's dated. That's incredible. So, from starting with 500,000 and now to be over, 500, that is just, that is absolutely incredible. So was there a certain inflection point in terms of either performance or capital raising? Because obviously starting with 500, then, you got to 2 million. And then I believe one investor put in 5 million. That was incredible. That was like that's a huge deal for anyone really. And then, so was there like just an exponential growth curve at some point, or what was happening where you were able to go from essentially 500K to 500 million?
Yeah, I think there were like a lot of situations and circumstances and steps that um, took a lot of time to materialize. So like from day one, and literally, I remember very vividly the thought that I had that I should start solving problems that I don't yet have. Right? It's like I want to invest in relationships with people that I just have absolutely nothing to offer now, and probably for a very long time. But they're just those people, like even if they don't stay in this company, they go to the next one, and that is the guy, right? Like, and so I wanted to start building that track record with those people like as early as possible, and so just be different, just so that they keep a tab open, and when the right time is right, be it 5 years, 10 years, it's all like on me. Like if I execute, and if my scale becomes remotely relevant to their scale of minimum things to do, then then we will already have something to leverage. And so I think I'm kind of half jokingly, but actually quite seriously thinking, if you look to raise a million, 100 million, or a billion, or 10 billion, like these are vastly different problems that you're solving. Like your day to day looks very different. Like people that you talk to are very different, and so there were like periods where we would be like extremely focused on capital raise, and even when we're like quite scaled up and we're I think like one of the best, risk adjusted managers, one of the most institutional, whatever, best track record. Um, and, capital just wouldn't come in. And then now, like, we're looking, like some allocations, 50 million from one investor, 100 million from another one. So it's kind of, but it took, 5, 6 years, some of these things, to materialize. And so I'm thinking it's like sometimes you think that your actions, play a big role, but oftentimes not really. It's just, I mean, you can, maybe push the timelines, for some of these guys by, a couple months, but if they don't have, the sign off of the CIO, or like if the CIO doesn't feel like how it's the right, moment, or then it just, not much that you can do. But then once those guys start looking, and once they, come across, the segment that you're in, like you by default want to be one of the top three names in the world mentioned for that strategy. Because the way it kind of happened, and like I think we've seen it, many times before, is even if somebody is not necessarily a big specialist on the space, they just go to their friend that is and say like, who are the top five guys, and so you need to be part of that list. And all the incremental things that you do, conferences, or some the podcast, or thought leaderships, or like awards, or whatever other things that are kind of secondary, and primary always being performance. Then they all kind of accrue to this social capital that you possess as a firm. And that's really shrinks the timelines from the due diligence. But again, like I would say, like we went from 2 million to 150 rather quickly. So I think summer 2020 we were like around two, and then end of 21, in the year and a half, we're 150. So it went like really vertical. But then after FTX, and after all the troubles of the 22, we went down to 70. And this year we started again with 150. So we were like really not happy about the progress, because kind of from 21 to 24, the or 25 even, the size didn't increase, but then we went like more than 3x year to date. So I think it's just really what you kind of sometimes see with managers, is capital is the top line figure that is very discoverable and very marketable. But then like the maturity of the business, the scalability of it, basically, like if you were given 10x AUM, what would need to change, right? And you would want to be in a place where you just say, yeah, we just do more of the same, and like I have all the pillars, and so the capital, top line, comes in and just spills over in all these areas, and it's all good. And but then also importantly, the investors that you have, they must be scalable. Like tap in family offices and small individuals, like they can give you like a ticket, maybe they can double it, but then you stay. With institutions, they have permanent capital oftentimes, or sometimes, and their timelines are much longer, and they have much more size. So as you build track with them, they can keep on scaling, and keep on taking your capacity indefinitely. But naturally starting these relationships is intensely hard. Nobody wants to be the first one. A lot of them, they ask like, oh, who is similar to us that you're already working with, and then it's chicken and egg. But once you cross that bridge, and once you tap into institutional capital, then it's all about your capacity and your performance, rather than your ability to go to every single conference under the sun and beat the drum the loudest.
Incredible. Okay, so tell me about the evolution of your strategy, because you start off with market neutral. I guess like take me all the way back. What was the thought process around starting market neutral, especially back in kind of the 17, 18, 19 days? I feel like lots of folks back then were pursuing kind of long short, or maybe like just like long only. So tell me about the ideation on market neutral early days, and then how has your strategy evolved since?
I think I spend a lot of time thinking about this. Again, like first principles, be it in business or in life. I think all these things, they have a lot of parallels. And at the end of the day, you can formulate it as like this: the life is full of uncertainty. You're always acting on impartial information. you have, a bunch of data that you acquired by this, point of time. Oftentimes your decision is not necessarily time press. So when you're ready, then, you make a call and, live with the consequence. So you kind of really want to strike good balance between exploration and exploitation. And what I tried to do early on is derive couple of thoughts or like principles or beliefs that would be true for a very long time. And actually, funnily enough, I was reading one of the posts that I wrote, I think 2019 or something. So like one of the literally, first 6 months that we were like out of union, I was, literally just 22 with, experience of, zero, in a space of, fund management. And so like my emphasis throughout was like just not blowing up because I thought like objectively where we are in the food chain, we're like at the very bottom, like nobody had any reasons, to give us a chance or like give us capital because we have no track record, no, big pedigree to speak of. So if somebody somehow still sends us money, then if we lose even a bit of it, then like they had no reason to do it, and now they have even more reasons for why not to do it. So I thought, if anything, we should try to win time. And what that meant is obviously, it was having said all that, I was irrationally optimistic about like our future. But then we had to live to the moment, for it to play out. Like if we were to to blow out or like finish the game before we get to the point of scale, then it's it's like means I'll push too hard when there wasn't any reason to. And so I wanted to craft a strategy which would be very passive, somewhat like really stable. At worst case, we kind of make money, but like not as much as people would want. And so people could be upset that maybe we're not delivering, the taking the stars of the sky, but at least we're making them more money. And so that was kind of the thesis. So I wanted to focus on market neutral stuff, which just leverages our um, superior understanding of the markets, market microstructure, different inefficiencies that are present, and leverage our technology to really try to provide liquidity, try to source those mispricings in a programmatic way, and find whatever the liquidity mismatch is and supply it to the market. And that kind of was the idea that I think in any system, especially the complex ones, like you want the system to be doable. You want the system to be um, be able to coexist with whatever that you're doing. So like if in the limit you're like really taxing the industry and you're like really predatory to it, then you're not helping it to grow. And as being a digital asset fund, obviously we're inherently long crypto because if it goes to zero, like there is no market to trade. So we wanted by default to be in a small way and then eventually in a big way to accrue value to the ecosystem through our participation, through the service that we provide to the industry. And then, once we reach scale, then we could have a lot more levers to pull to really try to foster this, growth and adoption, and and be like an integral part of it and monetize, the service that we're supplying.
Within the market neutral bucket, I've spoken to lots of folks, and they said that in the early days, like exchange arb was really fruitful and very alpha rich. But as time has progressed, it's like the alpha has been compressed dramatically and within certain strategies. So within the market neutral bucket, are you having to evolve the sub strategies constantly in order to stay performant, or is it still quite alpha rich?
Yeah, I think obviously we spent a lot of time thinking how can we do a better job. The best like a couple of things to say. I would say back in the day, sure, like the profit margin was much bigger, but the total size of the pie was much smaller. So although okay, you could be making I don't know 5, 10, 20 bips per trade, but the volume in the market was substantially smaller. And so the total amount of P&L that was available to this kind of strategy was, I would argue, meaningfully less. Okay, maybe in 21 this was like peak exuberance, so that's a bit of special year. But other than that, I think yeah, now that industry matured or keeps on maturing, I think the same strategies, they are just inherently much more, or much better suited for proprietary trading firms that have just different economics, much more focus on yeah, just short term returns, market making, and so effectively the way you can view it is, back in the day, anyone with like very modest, sophistication and um, who could really strip out this high quality market neutral returns. But now like the barrier to entry is so much higher. You need to have so much infrastructure, and so you're competing with really like very best trading firms in the world that's very accustomed to making many billions of profit per year, many years in a row. So you kind of a bit need to find some niche, and again like know what to focus on, because um I think as a fund manager, you're basically like entrepreneur that is looking to, your product is your strategy. So input is capital, output is return, and so you kind of need to be very strategic on like what is sellable, so that capital comes in, how to prioritize things so that the infra doesn't cost prohibitively much, but at the same time the expectation of return is within what LPs expect, and has a reasonable to high or very high, depending on your confidence level, likelihood of playing out. So I think from our side, actually for like probably 5 years straight, we just focused on doing one thing, but doing it like super well or like as best as we could, because we felt like um, a lot of people would take shortcuts and be like, okay, if you trade not on 20 exchanges but maybe on 3, if you trade maybe not on so many coins but a bit a smaller universe, if you trade a bit less actively, if you lever up a bit less. So all of these incremental things are rather small and maybe not necessarily very impactful in isolation, but then if you stack 10 of them, then you're like, it's night and day, right? And so you could almost kind of think the better of this kind of return, kind of market return for this kind of strategy is X. And like we thought that with each of these investment, each refinement, we can squeeze in extra 5%, 10%, 20% of return on the the baseline that we had. And as team grew and as we scaled up, the dream and so the goal and the vision was always to evolve into this multi-strats setup where we could be utilizing this platform alpha that we build, this really in-depth, very optimized trading strategy that we've been harnessing at, I would say, like really big scale by crypto standards over the past 6.5 years, and creating like a pretty nice track. And so what we now, like in in the second chapter of Fasanara Digital, what we want to do is like bring a lot of portfolio managers that's leverage what we have, and essentially kind of widen the aperture and bring it into new areas where we're just building our competence and diversify the returns by leveraging this infrastructure that we built, and really try to evolve into this proper scaled up multi-strat, similar to some of these institutional funds that pioneered this pod structure, multi-strat structure over the past couple decades.
Yeah. How do you think about alpha compression going forward? Because, we're going to have like obviously Jump's very active, the Jane Street's active, et cetera, et cetera. And they're not like Citadel and these other large players are not even like fully in yet. So how do you think about alpha going forward? I know that the universe of crypto, I mean, this is our thesis, hopefully, is going to expand dramatically, not only with like the current market assets, but also lots of RWAs and tokenization of securities and all sorts of weird and wonderful, like, new types of have assets on chain. But how do you think about that in terms of your actual strategy and just going forward? Um, do you imagine that like the crypto natives have a limited time to be competitive in things that require heavy infrastructure, speed, et cetera, because of these bigger players that are going to be entering over the coming years?
It's hard a little bit to speak on the behalf somewhat like the industry. I think in general running a crypto fund is very hard, because the expectation of investors is very high. I think by default they kind of um, think that there should be substantial premium in return for taking the crypto risk. One, then two, the argument of like, oh, like Bitcoin is up last year 120%. Why are you up? Whatever, like big number that you are up. And so some people, so it's been I think very hard for a lot of managers to beat the Bitcoin. Not that they should, because hedge funds should be hedged and trying to be long short, or depending on what the strategy is, but eventually just start trying to compress the volatility of the returns. And obviously Bitcoin has been rather volatile historically. So I think like just AUM side and ability to deploy AUM is very hard. Like, and that's why I think on the con side, liquid side, there are like very few scaled up proper institutional managers. So that's kind of obviously like if performance was great, then you can find capital. But some feds are in different periods of time good performance, but just still couldn't scale up the business. Which maybe it's a combination of just not enough LP capital for that. Maybe not institutional enough. Maybe it's just not having the right processes in place. But I think after compression, for sure, like the market is more efficient, and um, it's usually more the case that the better guys, more skilled up guys, they just get into this self reinforcing loop that kind of keeps on strengthening their advantage, because they can improve the infrastructure. They can afford better and faster and more scalable things. As a result, it's a bit easier, for them to hire better quality people because they like all the nice and shiny stuff. The company is viewed, more successful, more blue chip, and more stable, and you can give bigger comp packages. So effectively, it becomes like with like this football, if you want, or like some sports, where even if 1 year some like up and comer breaks in the top of the leaderboard, it's very hard for them to stay there for too long, because some of this scale that gets embedded in the biggest guys is just so powerful. Like with investors, investors can forgive you because you've been proven to be successful and durable over a long period of time. So I think just answer the question. So compression, yes, some of the prop shops they're doing very well, but that's rush. I think it's really critical to know exactly again where you are in a food chain, what you can do, what you can't do. Pick up very thoughtfully what your battles are and where you have a chance to emerge victorious. And ultimately, like what kind of size of the problem you're looking to solve. Like, are you trying to build like a massive business, or you just try to do something that you like and not necessarily look to overcomplicate your life. And I think it's all part of the same optimization. It's like, what are you trying to do, what are you trying to achieve? And contrary to maybe common belief that most people hold, I think like more is better is most of the time not true for not most of the people.
All right. So as the strategy has evolved, you're now multi-strat, and I believe that the breakdown is you have your market neutral, which is kind of like the digital. You have the I guess we'll call it like, I mean, I'm butchering this, but like quant, which is the multi-manager platform. Is that accurate to call it that?
So actually, like a Fasanara Quant is this other fund that we have that is actually investing in TradFi managers. It's actually not under Fasanara digital side, but we have a fund called MAP, Managed Account Platform. where we do internal allocations and external. So it's essentially tries to replicate this multi-strat model where we have different pods centrally risk managed through our platform, and seeks to combine and aggregate all of these trading strategies as part of one umbrella fund.
Very cool. And that is those are SMAs that each team is managing separately.
Yeah, correct.
Okay. Very cool. All right. So ventures is that the other part of the strategy?
It's basically our smallest fund in 21. We thought that this could be very synergistic, and it could make a lot of sense for us to have a venture side, because as a very active market participant, we get shown a lot of deals, and especially as afterwards, like we've really doubled down on our DeFi exposure, and we're looking to scale it up greatly in quarters to come. Like we now aggressively hiring for a number of roles in that side of the business. But venture effectively was our way how to invest in areas where we are direct users, and essentially um, leverage this relationship where we could put a small check at the early stage, contribute to the design of a protocol, and become day one users of it. And so because we use it, then that means there is a need for it, and then hopefully we understand it better and can underwrite it better than the market. And so that was the idea. But to be honest, the timing didn't work out too much. So like we'll launched it a bit too late, in mid 22. So we weren't able to scale it up much, and effectively like we made a bunch of good investments. And some of the notable ones are Morpho, for example. We're early in Morpho, and we kept on being a pretty substantial client and user of Morpho over the years. This is like one of the big, success stories. But yeah, as of today, we keep on, investing. We've done maybe like 10 investments past 12 months. It's mostly partners' capital at this point, and we're not really looking to raise money for it. So it's kind of, we throw in small checks here and there where we have strategical synergy. And yeah, that's kind of, I guess, holistic overview of for Star Digital.
So it's primarily, I would imagine it's primarily DeFi focused because it's products that you guys are going to be wanting to use and can see a clear value for. Is there any sort of within that DeFi bucket? Is there a reoccurring theme even within that? Like, is it all? I don't know, I'm making stuff up, but is it like all stablecoin yield focused, or is there any sort of theme that you're seeing within that bucket, or is it pretty random depending on the strategy and product?
So it a bit depends on the circumstance, but for example, we've invested in a custodian, Utila. We invested in prime broker Hidden Roads, which was recently acquired by Ripple. We've invested most recently, or relatively recently, in CAP protocol that actually crossed 330 million TVL within the first couple months. And so we worked actually quite closely with a couple of projects on the incubation front. One is called Pareto. They're effectively, we created like a vault where people can essentially lend USDC to us, and I will pay higher a yield than Athena on stable coins. Then we have together in partnership with them like a stable coin, which effectively mimics the USD SUSD mechanics. So it gives some points and a multiplier for the staked Pareto. For USP it's called. And then most recently, and this been biggest success story on tokenization front, we tokenized one of our funds. And basically a mix of private credit and crypto exposure. So the crypto exposure is our market neutral fund. So put it on Midas protocol, and it's received 155 million within 2 months. So it's been like a massive success, and again like showcases the innovative nature of our approach, and our ability to kind of take an idea, package it in a crypto native way, and distribute it through the channel.
Very cool. Okay, so from an operational standpoint, what type of complexity does the tokenization of that fund? What is that? Does that cause issues from an operational standpoint, or is it just no? We're simply just tokenizing this asset and putting it on chain for easy access. Like, what are the weird crypto nativeness comes out of that process, if any?
It's been like a delicate process. Like what's been like a, I mean, that was our expectation, and and like a very important building block to enable that. But we've been really positively surprised on like how composability really like reinforced the scalability and allowed much wider spectrum of people to consider the product and participate in it. What I mean is, you could effectively mint this stable coin or this token that represents ownership of this fund, and then you can go to a lending protocol like Morpho, and this is again underlines how all of these pieces come together, and then you can post it as collateral and borrow against it, and then lever it up. So you can essentially loop the fund exposure. And so this is really, really, cool idea where you can get a very high LTV, get some lenders that maybe, don't want to have equity exposure to the funds, and they can essentially lend with, haircuts to those people that want to loop it. And effectively you have three cohorts of people. One is these lenders that get smaller rates and get quite a high collateral quality posted to them that they lend against. Then you have those people that mint it, and then those people that borrow against their position. So effectively this kind of defines the whole spectrum of different market participants, and allows us to essentially just provide the tooling, provide the building blocks for people come in and express their risk appetite and structure the trades accordingly. And from the operational standpoint, to be honest, it's been a pretty long journey for us. Like the guys in the tokenization team did like an amazing job. I think it took 3 or 4 different iterations, but this implementation just really hit all the right accords. And reception on the uh, LP side has been really good. So I think everyone are been very happy, but there are a lot of things that we're still working on, and we want to launch a Bitcoin product with kind of similar intention. But I think again, like it all part of the same thinking of like what is the problem that we're trying to solve, what kind of principles that we are adhering to, what are kind of these building blocks that we already have, or how can we very synergistically through like long-term partnerships, through trust that should develop with key stakeholders in a space, built on top of the stuff that we already have.
That's super, super interesting. So the team that you've assembled to do these different things, it's kind of interesting because it's like on one hand you need quantitative traders, quantitative researchers that there's like pre-existing skill set there that you can tap into and find folks that have that skill set. But then you're talking about people you're kind of talking about new things like tokenizing this fund, and now there's going to be a Bitcoin product like that. That's not really a skill set that necessarily exists. So how do you think about building and assembling this team that can not only operate market neutral fund and operate at a high level and do that well, but also introduce net new products into the market and do other interesting, weird, unusual things?
Well, I would say one thing, I mean, it all starts and ends with having the right product, right? Like if, I mean, I guess it's not extremely true, but eventually if you have, shit product, even with amazing distribution, it's quite hard, job to do. But I think like our innovation really started to come to fruition past, maybe 12 months, 24 months, um, because we felt and we're, very proud of the results that we've achieved. Obviously, like it's very small, fraction of what we think, what we want to deliver. But eventually you want to have, some product that's kind of stood the test of time, the benchmarked against, the direct competitors, and is, is good enough. And then you want to be thoughtful about the narrative. I think distribution is extremely, extremely, important, and it's just not true at all. That's if you have, performance, then, people just knocking your door, or that like there is no tomorrow, because just look around, all, some of these hedge funds that's running a lot of money, and this is kind of what annoys me quite a bit. It's like on Twitter sometimes you see this complete ignorance where people look, pick up on some of these big hedge funds, some of these big multi-strats, and saying like, oh, they charge you so much fees and this and that, and they're underperforming S&P. But I think like this is where like it all all comes together. Is eventually there is tons of capital out there, in the world, and you need to have products that solves exactly, or if you can, or at least proxies the solution that's a given cohort of people seeks, which is a combination of some like risk and reward, right? And then you can go in a lot more detail what each of these component means, but in simple terms, risk and reward. And so no, for the multi-strats, there is basically infinite size out there of capital that is available for them, because it gets in 30-year track of equity-like returns with a fraction of the volatility at scale, which is the critical point, right? Doing some stuff at like a couple 100 million is just you're not solving problems of the of the big guys on the deployment. Some of them, the minimum that they would care to pick up the phone is like 1 billion. So you're just not solving any problems with your solution. So I feel like what we try to spend a lot of time, and that's why like in a way with our market neutral fund is one thing that's took off at least in some way. But some of the other products that we tried, and if it didn't work, we kept on going, but more in a limited capacity, and we keep on iterating. But it's not ever 100% hit rate. And I think it's really critical to think about the narrative, the structuring of the product. What are you trying to achieve with it? Get the feedback from investors. What are their biggest reservations, and so on. But just to kind of seed an idea, there is, let's call it 2 trillion of Bitcoin, or 2.5 trillion of market cap, something like that, probably closer to 2 at these prices, and a lot of it, or probably 99% of it, generate zero yield. So you basically could frame it like this: there is 2.5 trillion of capital that's undeployed. Okay, you can probably slice it by like really big amounts, but this is still like probably more AUM that's being deployed to the space to date, or maybe ever to date. So finding a product that would in a risk reward way justify an allocation, this is a pretty straightforward analysis. So then you're like, okay, how do I pull of those people? How do I structure it? How do I do this kind of stuff? And but then you have a proper idea. And similarly, like across everything else, you just need to think like, what's your addressable market? What are the problems that those guys have? And try to solve them. And if you can't just yet, then focus on the next cohort. But I think this introspection and reflection are extremely vital areas to spend the time on, because otherwise it could be just being extremely busy, but like getting nothing done and like no results. But ultimately, as an entrepreneur, you judge by results, whatever that you've done, whatever you deliver.
All right, so you guys have built a ton of infrastructure for your own operations. What's either you built it in house or there's something off the shelf. What's the biggest pain point when it comes to operations and infrastructure? Like, if you could wave a magic wand and be like, man, I wish that a company existed for this function, what function would that be? Or there are just so many?
There are lots, and for example, some of these exchange integrations are a big puzzle, and it's kind of the I'm always we always have like this running joking internally that say, our tech team, irrespective of the size, is always like understaffed, right? It's like, you hire two people, then it feels like, we need three more. You hire more, then you feel like you still need more. But the thing is like our requirements are growing disproportionately faster. And so, and also the complexity of the business is increasing, in a non-linear fashion. And what that means as you put it together is that um, you interact with these exchanges, which a lot of them by now are like quite legacy, although haven't existed for too long, but they already have some tech debt. Some of the documentation is pretty problematic. Some of the basic functionality doesn't doesn't exist, and then maybe it's not standard, and so on and so on. And as a result of it all, you just spend a lot of time just being just chasing your own tail, trying to to do the basic thing. I think some of the stuff in DeFi is really nice. And us having more bandwidth, which is what we're trying to achieve through hiring, would help a lot. Just to be able to wave a magic wand and say integration was this done now, integration was this done now. But things like also this integration, like from 3 years ago to now, this is like very different integration. Because if like before you could have said that's okay, let's just do the basics, and then like if we encounter some like edge case, we we address it then. But now like because there is much more at stake, and many more people in the team and so on, integrations take much longer, it's much more thorough process. And in a way it slows down things, but then it's really makes the whole process much more robust, and it's much less error prone. um yeah, so I think these are some of the things that's on top of our minds.
Yeah. So how do you think about the evolution of DeFi? Because there's a lot of folks that are saying like um, Morpho vaults and I don't know, other products kind of like that are going to potentially take over asset management someday, where like a lot of hedge funds and maybe even venture funds like won't need to exist because you can access these opportunities on chain in some capacity. So that's just like one example. I mean, DeFi is so large, but how do you think about the evolution of DeFi? Because you are running a asset manager in addition to you're active on DeFi. So how do you kind of view that?
I think evolution, like DeFi is has like an extra thing that it is going. So I guess let me put a couple of pieces on the table, and then like I'll formulate my thoughts. So I think in DeFi, what is very powerful is that there is a token, which sometimes is a direct, sometimes the indirect proxy for the success of a project. So I think that that's one thing. Then second thing is like much clearer transparency, which in a perfect world, the more transparency you have, the better. That's pretty much like a pretty strict truth. Then a couple more is that some of the costs that maybe exist in TradFi setup, they could be either minimized or almost like alleviated altogether through some of these DeFi native solutions. And then another one is I think that the cohort of investors is much more risk seeking and much more ready to underwrite crypto risk, because effectively I think it's pretty clear or pretty fair representation. There is a bunch of capital that is on lives on chain. Maybe it's on a given chain, maybe it's like different slice of risk profile, but in one way or another, these kind of guys in a fully automated or somebody underwriting the decision decides on what is the best risk reward thing out there. And to be honest, like the risk part is not necessarily well priced in the in the reward function. So sometimes you really see some things are having like disproportionate yield for the risk that it takes. But put another way is a lot of people, once they convert fiat into this crypto tokens, they get this uh, desensitized to the risk that they're taking. They will, oh, this is like casino money, like, oh, like I have 1,000 units of this whatever, and if it goes to zero, like like I didn't have any fiat in the first place. And so I think this just really shortens the feedback cycle, and like people's desire could just make a call. So if you put it all together, and obviously, like I'm simplifying massively, I think there are a lot of goods and bads. Like we're seeing, tremendous amount of examples where people got over exuberant and chose the short term versus long term, and jeopardized the trust the users and investors put in a given project. And part of it is just it's hard to do like big things at scale, and that are smart and that's still viable after a couple of years time. But I think now, and our example with Midas is it's kind of a bit of a window in what the future could look like. It really allows to slice and dice and partition investor into different categories, underwrite different tranches of risk in structure, and something that makes a lot of sense for everyone involved. So I think it could be actually very true that some guys that are smart, so they could build some on-chain, full on-chain funds, which I think there are already a couple examples, which are completely disattached from you know, um, some of these, TradFi, very, Cayman fund administrator here, lawyers there, and all of this, very cost heavy operation. And so just focus on, technology first, things, composability, and really try to do something unique on chain or off chain and package it in a, crypto native DeFi way and use it as a tool to, attract TVL and then, go from there.
All right. So do you participate in prediction markets at all? I mean, from like a institutional standpoint, is that an area that you're excited about and that your firm will maybe participate in?
We haven't yet. We're keeping tabs open. I think it's for sure, very quickly evolving side of the markets. Some of these, announcements about the investment in bull market and Kalshi and the liquidity that is increasing. I think it's still a bit of early days. But for sure, some of the guys that have the bandwidth to look at it could be rewarded should it get a wider adoption. I think it's just very interesting, segments of the market, and just allows people to express and bet and go to their natural animal instincts, and speculate. I think one of the maybe underspoken, I think maybe semi-controversial views, but I think crypto is just a way for people to not to gamble and like express their beliefs, and try to be good with the judgments, speculate with something so volatile, and realize the dream of being successful and getting capital. But I think here, because it's also involves certain events where you might have at least to your own self some supposedly differentiated and both true view, which probably most of the time is not true. But people like to speculate on all sorts of things, and creating a platform for people to do that already proved to be very successful idea. And I think it's only gonna gain wider adoption.
What are your views on DATs? DATs have been a really popular kind of category over the past year. Are you favorable towards DATs or unfavorable? What's your general take?
I think MicroStrategy as a true pioneer in that segment has been extremely instrumental in um, popularizing Bitcoin and digital asset as class, and I think it's by now very hard to make a negative case for MicroStrategy's impact on the space. So I think overall, if you just evaluate, I think that's been very useful. That said, I think there has been really big trends of launching that for like every single thing under the sun, and I think it's kind of get I think maybe by some of the operators was viewed as a get rich scheme, and like easy trades, and look at those guys that are not doing much and already having so much. Let me do maybe a bit of something, and then have even more. I think like with this kind of rationale, you're setting yourself for turbulent times. I think this MNAV is extremely hard metric to be above one, like in the normal course of things, and I think it's also really benefits the scale. So like if somebody has a really strong brands, and if somebody has really unique opportunity, some efficiency, some additional something on top, then you can kind of justify it. But as default, some of these trusts where you put money in and there is no redemption in kind mechanism, they all in TradFi trade at at a discount, sometimes really substantial. So and there are like a lot of costs involved in this, and also effectively you can view it as people just trying to take a coin and then try to generate yield on it. But yield doesn't come for free. You need to be taking risks one way or another, especially if it's levered up, and if your debt is like very far out, and you have a very volatile token, then it's becomes a pretty big art and science to manage, and all of this. So I think like a lot of them, they just not likely to succeed for a very long time. What's going to be interesting is like acquisitions. I think that's if you're a big one, just scooping in the small ones at a discount. I mean, then that's a cool strategy. You're effectively using your MNAV, and just buying like less than your MNAV, that's and just stacking up your coin inventory. I think that's probably what will end up happening with many. Maybe some of them they will be broken down, and be returned to some of the investors. But I think it just kind of got a bit ahead of itself.
And I have a random macro question, but what are your thoughts on gold's performance? Because I mean, gold's going crazy. Obviously, the markets are TradFi is all-time high markets, but crypto is still kind of, I don't know, in this range bound a little bit. So do you have any takes on like gold and kind of the relative underperformance of crypto comparatively?
Yeah, I think it's a bit puzzling, to be honest. I think crypto historically been a really reflexive to the upside, especially on the whenever liquidity comes in, the debasement, softer dollar, all of those are like positive when there is rate cycles, cuts, and general adoption of that class. Like all of these things, I think should usually benefit the price action. Gold obviously being a spectacular winner, like past 12 months or so. Just yeah, I think it's clear that there is a big de-dollarization theme that is playing out, and people and a lot of the governments are still opening into gold, just as a strategic reserve. So I think that is really impacting, and gold's dollar index has been dropping for a while now. Year to date is in a quite big drawdown. But I think US is not really blown away. And so I think the push that has been done out of DC on some of this, regulation, Genius Act, and so on, they're really setting a lot of prerequisites and a lot of things that are required for big institutions, to come in into the space. And I think there is at some point, maybe it's already now or maybe very soon. There is like a catch-up trades that could very well play out. Bitcoin, just has been mostly muted. Gold rallied so much. Maybe Bitcoin should catch up with gold. Um, and so I think it wouldn't really take much. Like we, I mean, we renewed the all-time highs. Okay, there was like big flash out on Friday, the 10th of October, but I think the big first principle things are still very much in motion. The big guys are arrived, or soon will be arriving. So I think the long term thesis is unchanged. The shorter term remains to be seen. I think there are like a lot of variables to be very decisive and confident about interpreting to one way or another.
Awesome. All right, Nikita, it is time for the closing questions. All right. The first one is the 4-year cycle dead?
I would think so. I think the Bitcoin block rewards already are like so not meaningful, because inflation is pretty small, and going from small to smaller, has like a smaller impact. I think it's also was largely um, lucky, or not lucky, but like it aligned with some of these big macro trends that played out. I around some of the rate cuts, or rate hikes. So I think it it's very, or it's I think there's no underlying reason for it to persist into the future. And I think again, like the block rewards already are pretty small, and getting like ever more mean, and ever more smaller.
All right. This is not financial advice, just for fun. What is your Bitcoin price prediction 12 months from now?
Well, I don't know. Like, to be honest, I was done spending too much time, thinking about it. We think it's going to be, substantially higher. And yeah, so I would maybe, uh, yeah, not comment on the exact price, but I think it's.
Oh, I need some clickbait. Come on, you want to give me any number?
I mean, I can say some big number just to just sort of to gets people excited, but I don't know. I think like getting to 250 is probably could be reasonable within 12 months, but I think there would be very large uncertainty bounds on this estimate.
Episode title: Nikita swears we're gonna reach 250K Bitcoin. That's good. That's good. No, I'm kidding. I won't do that. All right. All right. What is a belief that you hold today that your younger self would disagree with?
The belief that I hold today that my younger self would disagree with. I think when I was younger, I just I was convinced that like I should really focus on doing one thing and one thing only, and just be like so incredibly focused, which I think is very fair. Like as you're kind of progressing through the first phases of life, but these days I'm trying to be actually much more diverse. I mean, yeah, meaning like switching from one thing to maybe 3 4 things, because I what I realized is that if you do just one thing, then you kind of constrain your mind to think on a certain way, and you kind of default to fast thinking instead of slow thinking, and rederiving the steady state. um, and so what spent quite a lot of time on is reading a lot of biographies, and listening to a lot of interviews of athletes and so on, to really try to get into the minds of these highest performers, especially like on a very long timelines, and so try to draw some parallels to what we're doing. And for example, saying we're on marketing, like eventually as a fund, you build product, which are your strategies and the return and your infra, and then marketing is really really vital, or like a distribution. And so the thought is being laser focused on one thing versus being carefully and purposefully spreading yourself across a couple more areas.
Very cool. All right. How has being an entrepreneur and fund manager changed you as a person?
Well, I'm sure like I've changed quite dramatically. I get like one way to frame it is I had a lot of beliefs and thoughts um, that I thought are true. So this was like my best I guess as of then. But these were like strong opinions weakly held. But as I went through a lot of adversity and different circumstance, and again acting on impartial information and leading to some decent results, I think of a lot of these views I became much more set and like much more convinced that that is the way. So for example, on the people that you speak to. So initially, I thought that for me to really take on like a any meeting, any call would be productive, because I would just have a variety of perspectives. Everyone would see the thought, but with time, I just put way higher opportunity cost on doing anything, and you know once you create this ecosystem around yourself of really trying to be content and happy and like focused and like executing your person absolute best states to do all that, then for you to get out of your comfort zone to do something else, the bar should be very high. And so I became much more purposeful on time, and on activities, and on things, and also like yeah, and just say no to things. And so but then equally maybe seeking some other experiences or activities that would change my perspective or put me out of comfort zone, to really reevaluate some of these stance that I for framed over the past years.
Tell me about a time where you almost quit, or like you were super, because you've been through a lot during your journey here. But was there, yeah? Can you talk to me about a time where you almost quit, and then what made you stick to it? What made you keep grinding through this whole process?
Actually, I don't have any examples, to be honest. Like I when I was earlier in the journey, I knew that like I'm setting myself. I basically, committed myself, to like a goal that's, like an ultimate goal, for me, that I'm, set myself, is like the most important thing in my life, and I'm committing the whole life, to it. And so I thought, for me to even like with even mild confidence, think that this is possible, or that, I'm gonna, walk even, some tiny fraction of the journey that I'm, contemplating, in my mind. I'm gonna endure a lot of struggle, a lot of pain, a lot of hardship, and so I kind of by default assume that it's coming and it's inevitable, and like I wanted to build myself from the philosophical ways to physical ways, to really like um, choose the longer path, the harder path, to persevere, to make sure that I'm strong enough to endure it. I would say maybe the hardest moment of my life was when FTX happened. We had 16% of the funds in FTX, and that was really challenging. A couple months, and then a couple quarters, and then a year. Because by then, like I think although it was never easy, but like things just kind of were like in a straight line, just improving like every month. And then it was like, a big blow, and I was like uncertain what's going to happen, whether industry will keep on existing, whether we're going to have any capital, whether, there is any trust left, from the investors. And so at the end of it, I kind of, but, there was never like a thought of like, oh, let me look at job market, or like let me talk to a recruiter. Just there was like, it wasn't even like an active decision not to do it. but there was just never like even a thought of like, oh, let me think. Like it just never was on the radar.
I love it. Love it. All right. Last question. Is there a piece of content, whether it be like a book, podcast, movie, et cetera, that had a major impact on you?
I think like a lot of them they did, but like in uh, I think it was there wasn't one thing that was so like overly impactful. Maybe just to say one example, and it wasn't really like a book or a movie, but it was like a conference. So I was like a student, 2017, and so this was the first conference I ever been to, and this was organized by LSE. Effectively, they brought a lot of hedge fund managers, venture capitalists, some private equity investors, and was pretty, I'd say, exclusive thing because you had to apply. There were like 10,000 students, and they choose 300. So kind of to be there was reasonably good testament that whatever like you've done, like you have a good CV. And so when I was there, like as a very impressionable kid, very early on, I've heard some of the stories of the super big guys. Rubenstein, David Rubenstein was there, and like bunch of other billionaires, Jim Breyer, and so on. And so they effectively yeah, we're speaking about their career, trying to give some advice, and trying to inspire the younger generation. And I was there, and I was really struck that I felt like these guys, they're like so much different. They're like so much more, I don't know, smarter and like. But I walked away with the realization that at some point they were just normal people, are having very little capital, but just a dream that they can do something big in life. And they took risk, and sometimes failed, sometimes worked out, but I know persevered. And after 30, 40, 50 years, they became one of the biggest players in their respective area. And so like was there like literally like that day I walked away from there and thinking like, okay, this is the moment to like start pursuing my entrepreneurial journey. I'll launch this team to focus on crypto trading, and then launch the conference, because like if this kids at OSC can do it, why can't I do it? But I didn't care about venture and private equity. I wanted to focus on hedge funds, and so I did the conference focused on quant trading, because that was the thing. And that's kind of how it's what we started with the podcast. We're kind of finishing just was the events just perceived in the formation of the group, and the impetus that it had.
Amazing. Nikita, man, thank you. This has been incredible. Where can people learn more about yourself and learn more about Fasanara?
LinkedIn probably, and Twitter. I post from time to time. I will also host our annual conference 27th, 28th of November in London. It's 400 people, all the key decision makers from big TradFi places, crypto native places, exchanges, banks, and so on. Um, yeah, I also like back in the day did some podcasting. Like I have my podcast Speaking to Legends. Yeah, these days I'm just mostly focused on the funds. But yeah, these are some of the ways to keep a tab open on us.
Amazing. Thank you, sir.
Thank you. Thank you.